Hello and welcome to another video on our YouTube channel. This video will be an introduction for complete novices to Forex, some Forex terminology, and it will also be introducing our next video, which is coming out on Sunday, which is going to be called Talking Technicals, and it's the first episode on Sunday. I hope that you enjoy the video and that you learn something from this if you are a newbie to Forex. If you are more of an advanced trader, this video is probably not for you, but perhaps it's worth watching to get a bit of a recap on some of the terminology. So what is Forex? Forex is the shortened term for the foreign exchange, which is the exchange of money over the counter, which many people know of, but they don't actually know what Forex is. They just think that it's changing money. So when you go on your holidays, you swap pounds to dollars, pounds to euros, and vice versa, and that's all people really know about it. So the Forex markets are made up from lots of currency pairs and also are made up of commodities such as oil and gold and silver. There are a lot of pairs to look at, but I personally stick to 3 or 4 pairs, and that is how I make an income. The Forex markets turn over $5 trillion each day, which means if you take a fraction of a percent of that 5 trillion, you're going to be making a very comfortable living. The Forex market is the biggest market in the world. As I say, $5 trillion every single day. Next, I want to cover what moves the markets. In this video, I will go into how the markets move and what actually does move the markets, and sort of dispel the myth and the misconception of what people actually think happens in the markets day to day. I often use the analogy that retail traders are like ants. You will realise that retail traders have no real sway or power. Yes, we move the market in small amounts, but it is the banks, institutions and the higher powers which actually dictate where the market goes, and it's as simple as that. There's nothing too complicated about it. The misconception is that retail traders are the ones that move the market each day. Now let's move on to how brokers work, and this is a question that I get asked a lot on my Instagram, and it isn't a complicated topic, so I'll break it down very easily so you'll be able to see how brokers work, how they make their money, and what is in it for yourself. Brokers have a few different revenue streams. The main 2 revenue streams are something called spreads and something called hedging. Firstly, I'll start with spreads. Spreads are the commission paid to the broker after every single transaction that goes through the broker as a middleman. They take a market price, and if you agree to the market price, there will be a small difference between the sell and the buy price, and that small difference is what's called the spread, which could be up to 2 pips or maybe a little bit more depending on the broker, and also depending on the currency pair at the time. So as I say, the spread is the commission that brokers pick up regardless of what happens in the trade that you enter. Whether you profit from the trade or lose from the trade, the broker will always take the commission, which is why they exist, because they're giving you a platform to trade the Forex markets. The second income that brokers make is through something called hedging, which essentially means they completely cut their losses and they bet against other traders like myself and yourself because of the rule of 90. I have spoken about the rule of 90 briefly in other videos, but I will go through it quickly now. The rule of 90 is that 90% of new retail traders lose 90% of their money in the first 90 days of trading, which is a shocking statistic, but it happens, and it happens for a number of reasons that I've covered on my Instagram and covered in other videos. So keeping in mind that a broker could potentially have a 90% win rate, because if they are betting against other traders and hedging their trades against other people's positions, then they're going to have a 90% win rate because of the rule of 90, where 90% of people lose 90% of their capital in the first 90 days. They are happy to have a 90% win rate in Forex because they turn over a lot of money every single day. The next thing I'd like to talk about is the analysis side of trading, which is what most people neglect when they first start out trading Forex. There are 2 types of analysis in trading. The technical analysis, which is looking at candlestick charts, bar charts, different graphs to potentially project forecasts for where the price movement should potentially be going, looking at previous data. The second way to analyse the market, which is a little bit less popular than technical analysis, is fundamental analysis. Fundamental analysis is using the news and different data releases throughout the day, each and every day that the market's open, Monday to Friday, to ride trends where the news comes out and it's either positive or negative for a country, and therefore the currency will either rise or fall according to the forecast of the news and what actually came out as the release of the news. My advice for beginner traders is not to trade around the news, and I personally don't trade an hour before or an hour after the news, just because I like to see what happens in the news and potentially grab some easy pips just riding trends. For example, we have news this week on Friday, which is non-farm payroll, which is on usually the first Friday of every month at 1:30 p.m. UK time, which is an employment statistic that will be released, and it will affect the US dollar and therefore affect gold. This is what we call high impact news, and it happens every single month, as I say, on the first Friday of the month. I personally stay away from this because I know that it creates a lot of volatility and there is potential to gain a lot of pips and lose a lot of pips very quickly. Non-farm payroll is exciting to look at on the charts, but it is very risky to trade if you don't know what you're doing. I personally would say sit back, have a look, and leave it to the professionals. The next thing that I'd like to talk about is my trading setup. And as you can see behind me, it's nothing fancy. It is just a laptop and one additional monitor. If I'm honest, I only really use my laptop, and the additional monitor is just for video editing and doing website changes. You will notice on social media that a lot of people have 8 different screens to look at different currency pairs, to watch the news, and personally I don't think that is relevant, and it is just a marketing ploy to seem like they know what they're doing and know what they're looking at. I personally don't have the attention span to look at 8 different screens and listen to the news at the same time. I check the news before I trade every day, and that's the first thing that I do, so I don't need the news on in the background. I focus on a couple of currency pairs, and therefore I can use just one screen and flick in between. Pending orders are something that I use frequently, and I would suggest people read up on pending orders because they allow you to not be at your charts all day and still take trading positions and potentially profit from them. In the previous video on our introduction, I told you that I like to live life on my own terms, and that is exactly why I use pending orders. It gives me the freedom to be able to go outside, go to the gym, and do different things throughout the day. Most people know that I trade the London session every single morning, and that is something that just suits myself. I trade the London session because I'm up early enough, I'm an early bird, and I like to get my pips and enjoy the rest of my day. This does not mean I'm profitable every day in the London session, it's just where I see the most opportunity and potential to profit and then go about my day afterwards. As a trader, you need to work out when you're going to be trading and when it's convenient for you to trade. As I say, I always trade in the London morning session, which starts at around 7:30 and goes through till about 12 o'clock midday. Usually I'm done by about 10 AM and I've got my pips for the day, and then I can go about my day and enjoy my time. There are 3 main trading sessions. First trading session is London, and that runs from 8 AM till 5 PM. The session following London is the Open of New York, which opens at 1 PM and closes at 10 PM. The third and final session is the Asian session, which opens at 11 PM and closes at 6 AM. The Forex markets give you the freedom to trade whenever you want to trade. I personally trade the London session just because it's easy for me. The most movement often happens when the London session and New York session overlap, so that's around midday to 1 or 2 o'clock. Of course, in every trading session, certain currencies will move more than others. For example, in the London session, I trade the pound against the yen because I have a lot of movement and momentum because it's the London session and London is a pound-based currency. As I spoke about briefly, we have non-farm payroll on Friday, and often that is a catalyst on Friday afternoon to send the dollar and gold in a crazy direction. And as I say, if you don't know what you're looking at, please don't trade that, because you will probably lose a lot of money. If you did enjoy the video, make sure you give us a like, a comment and subscribe to the channel for future content. Our next video will be called Talking Technicals, and that will be the bi-weekly YouTube series, as I've said, and it will cover my forecasts and projections for the week ahead, and that will be out on Sunday by 7 PM. In the video on Sunday, I will focus on what has happened in the non-farm payroll week that we are currently in, and I'll give my projections on the pound yen, dollar yen and gold for the week coming up. Thank you very much for taking the time out of your day to watch this video, and that's everything from me.